Call to order, thank you. The audit committee meeting, second item of business is agenda approval. And I think we need to add an agenda item because this is the end of the 3-year contract for the current auditor, and we need to go back out to bid with a new contract. So it's really just making a recommendation to the board to go out to bid for the next contract. And the sooner the better is my understanding, just with timing and everything. So I'd like to add 5A to audit contract, just to make the recommendation to the BOC that we need to go out to bid.
So moved.
Okay, thank you. We got a motion? Yep. Second? Okay, all in favor?
Aye.
Okay, good. Any other changes to the agenda that we need to make?
Yes, if we could also remove the approval of the minutes. Those
Okay.
have not been completed yet. We'll have those next meeting.
Okay, 3. Okay, anything else, or motion to approve the minutes as amended?
Agenda.
Agenda as amended?
So moved.
Okay, all in favor?
Aye.
Okay, thank you. Skipping item 3 then, on to 4 is public comment. So anybody would like to make a comment, please come to the podium. Name, beach address.
Hello, Keith Smith, 107 Durham. A couple of things. I listened to how I got here today. I've never attended an audit committee, and I'm not here because we were recently elected. It was for another reason. So I know everybody kind of hates social media, but here's the good thing about it. There was a post put on earlier today, and it says this: which current Holden Beach commissioner said the following, and quote, "and no public, all right. How about that? Boy, I'm going to relish this for a second. It's so refreshing."
Keith, you need to talk
Okay.
about an agenda item.
All right.
Please. Is there an agenda item you're talking to?
Well, yeah, I can do that.
Okay. Which agenda item?
Number 1 is transparency.
That's not on the agenda.
Well, maybe we should put it on the agenda.
Keith, I'm sorry, but
Secondly, when we're talking about recommendations to the BOC, when we're talking about reserve balances, I think we need to be transparent about that. And so if you're going to make a recommendation to the BOC for a reserve recommendation,
Keith, this is not on the agenda. This is here for agenda. We'll give you the platform at the end if you want us to add in a meeting for public comments on all topics. But the agenda items are here. The meeting is open. Unless I'm out of order, somebody help me here.
my apologies, is the audit committee not making a recommendation to BOC to be heard tomorrow?
That is correct. We are not making a recommendation to the BOC to be heard tomorrow.
There's no document coming out of here today that the BOC will look at tomorrow.
Potentially, the need to go back out to bid with the audit, which would be a potential recommendation. But other than that one, no.
Okay, then I'll defer. Thank you.
Okay. Other public comments?
I wasn't going to say anything, but I will. Sylvia Pate, 111 on Charlotte Street. I looked at your draft. I'm reluctant to comment because I know you're going to discuss this, so I guess I'd rather comment on what you discussed during the meeting, but since I won't be able to do that, I don't guess, at the end. Anyway, it seems very complicated. It's just what I would like to say. It seems very complicated. I understand what you're trying to get at with trying to establish a big part fund balance policy, as you would have with any fund. But it seems like to me that there are constraints already in place as far as how much money has to go for what different components that are related to the occupancy tax. So I guess I don't understand why we really need this. And then my other question would be, if you're going to adopt a policy and you set that there has to be a minimum balance in there, where's the resources going to come from if the minimum balance is not there? I mean, are you going to take it out of the general fund? And if you take it out of the general fund, then eventually we're going to be exhausting our balance in the general fund, which ultimately, in the long term, is going to mean we're going to end up having to raise taxes. So that's a concern of mine when we start setting a minimum balance in there, because if we do, in fact, have a renourishment project, obviously we're going to use those funds probably that are in there, but you're going to have to set a minimum of money that we have to have in there. So that's my question. Where is that minimum going to come from? That's been troubling me.
Thank you.
Thank you.
Other public comments? Okay, agenda item 5, presentation of the audit. And Elsa, you've got the floor.
All right. If you guys have the presentation slides to pull up, we can get started.
Got it.
Okay.
Click the from the beginning up there, in the top left.
No, top left. So not the- Which,
Says from the beginning. a
Go
little bit
down.
lower.
Okay.
Right there.
okay, there you go.
All right, we're on the first slide now, Elsa.
Okay, great. So on behalf of Martin Starnes and Associates, I'd like to present the Town of Holden Beach's 2025 audited financial statements. I would like to explain before I begin that this is draft financial information. The report has not been dated or submitted to the LGC because there is a delay in the federal OMB compliance supplement. So because you're federal single audit this year, you have a federal major program, we cannot issue an audit opinion on your financial statements or submit to the LGC until we have this document from the federal government. That has been delayed due to the federal government shutdown, and this document is typically available in May and is still not completed by the federal government. So at this time, I cannot give you an estimated date on when we'll have the report submitted. What I can tell you is the numbers have stopped moving. This is the draft copy that we have. It's ready to go, except for the actual opinion letter date and the compliance supplement that we're waiting on. So I'll go ahead and continue to the next slide. Some audit highlights. The town received an unmodified opinion, which is a clean audit opinion. And I'd like to thank the staff of the town, especially Daniel, Penny, Heather. So many staff have been very helpful. Anytime we request information, it's given to us timely, accurately. We greatly appreciate the working relationship that we have with the town. There were no internal controls or findings and no compliance findings. Next slide, please. The LGC defines available fund balance as total fund balance less non-spendable items, less items restricted by state statute. The LGC uses this calculation to compare you to other units, and I will go explain this in further slides. Next slide, please. Okay. Total fund balance for the general fund was $3.6 million. You had stabilization by state statute of $272,000. This gives you an available fund balance of $3.4 million. This is a decrease in your available fund balance of $1.9 million since the prior year. And this decrease can be explained by overall decreases in fund balance given the $2.9 million transfer to the Capital Reserve Fund. That is the primary reason for the decrease. Next slide, please. Your available fund balance as a percent of expenditures for the general fund was 82.1%. The LGC calculates this using your available fund balance and recommends that you maintain at least 8%. They consider that to be 1 month worth of fund balance. You have approximately 10 months worth of fund balance that you've covered by your available fund balance for the end of fiscal year 2025. Next slide, please.
Elsa, this is Ken.
Yes.
Do we also have established a Town of Holden Beach minimum? Do I understand that right?
Our target.
That's correct.
Our target's between 40 and 70%.
40 and 70?
With anything over 70 to be transferred to the beach inlet fund.
Okay. Might be worth just listing it on that graph, at least for some transparencies, because it's a significant reduction in percentage. I don't think we're trying to create alarm with that change. Thank you.
Okay, so we want to add, just so I'm clear, we want to add to the slide the minimum fund balance percentage policy for the town.
Just a suggestion on that bar graph, just to show what the town is, plus you mentioned the 8%, which I think is LGC. Yeah,
Yes.
I think just for clarity, I think it might be helpful.
Which would it, since the presentation to the board is tomorrow also, would it be okay if you just?
Just said it verbally.
And the-
That's up to the group here, yeah.
Okay. And the LGC will start, if you even approach the 8%, if you start getting towards 15, 16%, they will start sending letters. So, I
Okay.
can put on the slide that the minimum is 8%, but they do start looking at that closer to as you approach that. And then I can add in the town's percentage and get that updated for the tomorrow's meeting.
But as an audit side, you're not seeing anything that's concerning, right? That's a key message there, right?
Yes, because I'm not seeing anything that's concerning, that's
Yep.
correct. Because mainly your fund balance decreased due to the capital reserve
Right.
transfer. So you're moving that for capital purposes.
Right. Thank you.
Okay, next slide, please. Your total fund balance for the general fund was 3.6 million, a decrease of 1.9 million. This is a 34% decrease, and this is again due to that large transfer out of 2.9 million to capital reserve fund. Next slide, okay. General fund summary, you had revenues for the year of 4.8 million, a decrease of less than 1%, overall comparable. And your expenditures were 4.1 million, an increase of about 13%, and I will detail this further along in the presentation. Next slide. Your top three revenues for the general fund were property taxes at 69%, permits and fees were 9%, other taxes and licenses 9%, and other revenue made up 13%. Next slide, please. Property taxes were 3.3 million. This includes taxes, penalties, and interest, as well as discounts. This is a less than 1% change and an overall comparable to prior year.
Elsa?
Yes.
I continue to get asked, or I have concern, it's going down, and I've always heard we've got tons of new building, tons of new property coming in, property, values are going, the ad valorem taxes are going down. I think it was even going down the year before. I think this is the second year in a row it's gone down. I'm just trying to understand why.
Let's see, I can pull up, it may take me a little bit to get that information for you as looking
Well,
at comparative reports.
it just, a red flag for me, when you hear how we're building like crazy, and we're putting up all these new houses, everybody's doing renovations, and we're adding to our property base, that's contra to ad valorem taxes going down. So maybe if you just can get an explanation in case somebody else has that question tomorrow, that would be good. But I just don't know the answer to that question.
Sure, I can definitely look into that. Let me make a note really quick.
Because I'm pretty sure they went down in '23. So '23, '24, '25 is a downward trend. I mean, it's not much. It's very,
Yeah, less than 1%, 17,000 to be exact.
okay,
Your collection rate for motor vehicles is 100%, and your collection rate for property excluding registered motor vehicles is 98.86%.
Has the collection rate changed over?
That is down slightly, so.
So I'm wondering if, because it's a small change here, I'm wondering if that might be the answer.
Yeah, your uncollected taxes were 38,000, so that could very well be it. I would have to pull the prior year reports to do a comparison, but I can do that for you.
I mean, it's just every month we hear the building inspector talk about everything that's going on and how busy he is and how much new growth and how much everything, and this just doesn't sync with
Daniel,
that.
do
So
we know
that's,
the valuation from year to year that's reported to us?
Tim, pull that mic down.
Oh, I'm sorry.
I'm sorry, my mic's dying, but, yes, we get the new valuation. How often from the county, Penny?
think every 8 years.
Yeah, well, reevaluation or,
Yeah, the evaluations are, I think it's once every 4 years, 3 years.
Yeah.
8 years usually.
Yeah, 8
Your
years.
tax base, in other words, do you get a report in your tax base?
Legally, you have to do the revals, you know, they have to do it at least every 8 years.
Right.
But I'm not sure what Brunswick County is, if it, you know, some of them do a lot less because it's such a drastic change.
I think
Yeah.
it's 4.
Four is a normal amount, anywhere from 3 to 5, you know, now that, because the price, the values are going up so much, it's helps regulate the amount when you do a reval. The values aren't such a big change.
Right, so I understand the revaluation process, but let's just say we added 30 new houses last year. Do we get a report of how much our tax base increased?
Usually, well,
Don't we get something from the county every year?
well,
We do, every year, yes, but I would have to find out and
Because
dig more into it.
that's what we use for the budgeted number.
Yeah,
That'd help answer this question, right?
yeah, and, you know, you've also got to take into account, again, as the unpaid property taxes, but then also with that right there is, okay, let's say somebody totally demolishes their home and then they're getting ready to rebuild a brand new one. So those are not realized. The values are not realized until you get the CO, and it happens in the next, at the end of December 31st of every year, January 1, that year is based on the previous year.
Okay.
So,
If you looked at that schedule, would you expect that to increase over the last 3 years?
Well, what year was the reval year? We just had a reval.
2 years ago.
last year, last year.
No, not last year, I think the year before.
So since we
2020.
did the reval and we chose a revenue neutral tax rate, everything that increased
Yeah,
ended up staying
Nah.
the same, so
yeah.
it's,
That explains that
Yeah.
year anyway, yeah,
yeah.
got it.
All right, so I've got the packet for tomorrow's meeting. I'm looking at Tim's report. It has total project cost, 4.2 million. Now, I guess this isn't per month, this is just a cumulative, but I mean, it talks about 91 projects underway, with $4 million. My understanding is when you finish the project and you've done your remodel or whatever and you get your CO, that doesn't drop to the tax base?
I'm not sure about that.
Okay.
so I don't think anything was uncovered from an audit standpoint that said we have a bad collection rate or some other concern. I do like this trade of questions to understand where this might go for budgeting type of thing, but I just wanted to separate the two, just so we're clear.
Yeah,
Is that, if that's fair?
those numbers those are county numbers, anything that comes in there, correct? I mean,
What, for the inspections?
like the ad valorem taxes.
Yeah, that's what we.
No, I mean, that's what we come in, but it's based on what the county sends to us.
That's right.
So, and that's how you,
From an assessment?
yeah.
Question for Elsa. Elsa, did you do an analytical around this?
Yes, I'm looking at that. I actually, just to let you know, I was looking at the prior year report just now, and your uncollected taxes went up about $8,000. So that can account for about the 1% change that we have here. We always do analytics. It was overall comparable to prior year.
Okay, thank you.
Okay, thank you.
Okay. All right, next slide. Permits and fees were $415,000. This is a decrease due to about an 18% decrease due to less building and fewer permit applications compared to prior year. Next slide. Other taxes and licenses were $460,139. This is a $22,000 increase, overall about 5% increase there, comparable to prior year as well. Next slide. Your total expenditures for the general fund were general government at 36%, public safety made up 40%, Transportation was at 12%, and other expenditures were 12%. And I will detail these further along in the presentation as well. Next slide, thank you. Public safety expenditures were 1.6 million, an increase of about 9%. This increase is due to capital outlay, primarily vehicles. Next slide. General government was 1.5 million, an increase of about 37%. This increase is primarily due to the payout of the former town manager for salary expense, and then the new Sabita, that's the subscription-based IT arrangement. There was a new one of those as well. Next slide, okay. Transportation was 493,000. This is an 8% decrease overall due to vacancies in the positions in the current year. Next slide. Your quick ratio for the water and sewer fund was 6.35. The LGC would be concerned if it were less than 1, so that's trending in the right direction. Next slide. Performance indicator for water and sewer fund. The LGC likes to compare your unrestricted cash over your total expenses, less depreciation, and adding back your debt service principal payments. This is a note that is compared to other units. So the minimum for the LGC is 16%. You are at 23.69% with this calculation, so there's no concern here. Next slide. Your operating income performance for water and sewer, you had an operating loss of 512,000, adding back depreciation of 640,000, and backing out your debt service payments of 662,000. You had an operating loss performance of 535,000. The LGC is concerned due to this being a negative number, and I will discuss further on the next slide. This is a performance indicator of concern for the water and sewer fund. I understand that you guys had this same indicator in the prior year, and I know Daniel might be able to speak more to that. The LGC does want a letter within 60 days of the audit presentation. However, since the audit cannot be submitted yet due to the federal delay, you should not submit this response letter until your audit has been submitted to the LGC. So we will keep you abreast of that situation. So as soon as we're able to submit to the LGC, we're ready to do that. We would just have to replace a few pages and date the opinion letter. That's where we're at with everything. And if you go to the next slide.
What's the letter gonna say?
Yeah, if Daniel can,
The letter's gonna say the same thing it said last year, except this year it increased, and that was due to the sale of 796 and then repaying that debt, because the income from the sale was not counted as revenue because it's not operating revenue.
Oh.
But the debt service payment was counted as a operating expense. So we got the expense but not the revenue. And it's the same thing with all of our debt service, because our debt service is paid with the sewer assessment that is tacked on to the tax bill, and that's not included in operating revenue.
So the
that's
water
why
sewer fund doesn't have the sale of the 796 property?
The
That's what you're
sewer
saying.
fund does, but it's not a operating income, so.
Got it. It's a one-time.
Well, that's a one-time thing, but we've always had this indicator, or we've always been right on the edge of having this indicator, just because of how our fund is set up, since we have the special legislation to do the sewer assessment to pay our debt service. That's also not counted as operating revenue. So again, the revenue is not included in their calculation, but the expense is. So they've never had a problem with our letter.
Okay.
That lays
That was
out.
my next question.
Yeah, because, and whenever I first sent them the letter, they said, or I asked, I was like, this is gonna be a recurring thing because of how we're set up. we need to do anything different. And they're like, no, just keep this letter for next year. So they're,
So there's nothing recommending to the Board of Commissioners we should try to change the structure so we don't have to do a letter every year?
well, we are, I mean, we did amend the base charge.
Oh, right.
Because it is a very tight ship even considering the debt, so,
Do you expect with that base charge that was implemented, that'll bring it to
I'm
a
seeing
balance?
that the revenues are already looking better than prior year.
Okay.
So Daniel, on the sewer capital charges, is that coming to an end soon, or is one of the, it seemed like we were paying off our share of the county sewer?
We're paying, well, all the water sewer debt is in that charge.
Okay,
And I would have to relook at the debt schedule, but there is a substantial portion of it coming off in the next year or two. So
Okay.
that charge is gonna go down significantly.
okay. So from this perspective, the charge,
The charge will go down.
we'll
So-
be better
so, yeah,
off
we'll be
than,
better off on-
than we,
on this
okay,
indicator.
okay.
How much longer will we collect the sewer fee? Is it permanent?
Yeah.
Until there's no more debt. If we issue more debt, technically it would go towards that,
Okay.
unless we wanted to change.
Was that changed as an assessment? I thought it was a permanent change. Did you talk about the extra charge?
Yeah.
Yeah. The
Well,
part that's
no,
not
the
operating revenue.
The base charge was a permanent change.
Okay,
The assessment's different. The assessment's what you pay with the taxes.
got it.
So the assessment will fall off at about the same time the debt falls off.
Yes.
So theoretically, that problem would go away over time.
Mhm.
Sure.
Okay.
Unless we issue more debt, which also.
Right, I understand
mean,
that.
Other municipalities, rather than having the assessment, they typically say, this is our debt, what does our base charge need to be to cover that debt? That way, that's just how the majority of them do it, but we have the special legislation, and I don't know if there's a tax benefit to it or what, but that's just how it has been set up since I've been here.
Okay, thank you. Okay, also, thanks. Back to
Okay,
you.
and next slide. This concludes my presentation. Does anyone have any questions?
I have questions about, we've talked about this audit, but no one's talked about the actual assets and where they are in value to date as we look at this audit. And do the auditors look at the health of assets and offer any feedback as to where they stand financially as it relates to the debt service? That hasn't, am I missing something, or I feel like that hasn't been a part of the conversation at all? We've talked about these numbers, we talked about this, but where are those assets, the peer, all the components that make up that water and sewer system that maybe there's some capital investment that needs to take place? Has that been evaluated as a part of this audit?
Yeah, they do audit our assets, and we have a complete asset list that they go through.
Yes, you can find that. Do you guys have the draft copy of the report handy?
I do, I'm probably the only one that does, unless,
I didn't put it in.
So I have it here, but it states, if I understand, it says netted depreciation. So that wouldn't, this is our assets as they sit on the books now, right? That's how,
what page or what figure?
well, it says.
We have different places that we report on this in the report. So, your Exhibit A is going to show your capital assets, net of depreciation and amortization. And that number for governmental activities is 11.2 million.
Okay,
And then your water and sewer is 18.3 million. And then that is also going to be presented in greater detail. It shows up in the MD&A, but it's also, the best place to look for that is in the footnotes of the report. Let me get to that page number and I can walk you through that. So it would be page 41 and 42.
hold on a second.
Yes.
Okay. You got it.
Yep, yep.
Okay.
Your governmental capital assets would start on page 41.
There we go.
I was always looking at the ones, I guess in the MDA on page 7, figure 2, which is kind of lists government and other, numbers are not exactly the same, but appear close.
Is there an itemization of those, of the items that go into these numbers? I get the bulk number, but is there an itemization breakout to say pier, car, VIN numbers, things that?
We provide that, so we actually, as part of the non-attest service, we maintain your capital asset schedules and run the depreciation. So we provide a list of that to Daniel, and it has every asset on there and what the depreciation amortization is. But in the report, that's not a required reporting. Some places have many assets that would just take up several pages in a report. So they are reported by asset type. So buildings and structures, equipment, vehicles, subscriptions, etc., are reported. You can find that the greatest detail that you might be looking for in the report would be on page 41 and 42.
Not the expert at this, but you look at the total asset zone. Is there an assessment of the risk of having to do an early write-off from the depreciation schedule and the impact on financials, or no? That's not part of what you do?
Yes, we inquire about impaired assets and any write-offs of assets. We test we do detailed testing of your asset additions, and then we test that your decreases, any disposals that you have, anything that is not fully depreciated or amortized gets reported as a loss on disposal. So we verify our beginning balances to make sure they match where we ended up prior year, and then we test the ins and the outs of assets, and we make sure that recalculate the depreciation and amortization to be sure that that's calculated correctly.
So that's what this net position, basically the overview that you had early on. Maybe, Tom, you said the figure 2. Basically, you're not seeing anything concerns on these assets? when you did
Correct,
the
I'm not
review?
seeing any concerns with your assets. And the LGC has these performance indicators that we discussed regarding the water and sewer fund. They actually take a look at how depreciated your assets are, if your assets are aging, and the LGC has a performance indicator on that. That's never been a concern as far as the town goes in the last couple of years. So that's something that we did not have a concern on this year.
Can you say again what that performance indicator calculation is that was in the slides?
The one in the slides.
What you just said, how it's calculated, just what's it?
Yeah, the one that there was a concern on, that is by taking your operating income or loss, which it was an operating loss of $512,000. We add back the depreciation of $640,000, and then we back out the debt service, which is your principal and interest payments of $662,000. So that's how we arrive at the negative $535,000.
Okay, thank you.
It's basically a cash flow computation.
Cash flow,
Elsa?
yeah.
Into the cash flow computation.
Operating cash.
Yeah, and
Yeah.
I can look at your cash flows.
As defined. Elsa, you mentioned nothing about the B-part fund, or at least I didn't hear you mention anything about the B-part. And we're going to talk about that a little bit later, but how do you audit, 3% of the gross revenues need to be used for tourism-related expenses. The 2% has to be used exclusively for beach nourishment. How do you audit that? How do you test that?
Can I add on to that? Because
Sure.
I had a question on figure 3, page 9, which has a B-part expense item of 2.25 million, and that's new as far as I can tell. I've not seen that on prior audits. So as Tim said, it's, what, is that the 3 cents, the 2 cents? What is that number?
That was previously, let's see, let me get there. So that was previously combined with the beach nourishment.
Yes, I gathered that from the totals, but yeah, okay. I'm sorry.
Right. So we split that out this year per, I know Daniel had requested that be reported separately since you're gonna be tracking that separately. So we provided that breakout this year. But we test the B-part fund. We test the B-part fund as a whole. We do revenue and expenditure detail testing, and then we test your assets and liabilities across, we test those across all funds. So we test your cash as a whole across all funds because it is reported as a whole. We test your accounts payable. We do a search for unreported liabilities. We test any assets, capital assets, all together, and then we do your detailed testing. I know Daniel can speak to this. When I'm on site, I pull several revenues, several expenditures. We look at anything over a materiality threshold for that, and just make sure that it fits in accordance with the fund requirements and that it qualifies as a special revenue fund expense or revenue.
So a judgmental sample. You do a judgmental sample?
Yes. We do, yes, we do. We base it on individually significant items. So we pull based off materiality, and we do a calculation of what is individually significant. And then if we don't get enough coverage of the population, we pull additional selections from there.
Thank you.
Do you test for redundancy in different processes?
Let's see, redundancy. I mean, if we notice anything in our internal control testing that might be redundant, we would certainly mention that as a recommendation. But we basically test for that you have proper segregation of duties, that you're signing off and reviewing journal entries, that the same person's not taking the cash to the bank and putting all the journal entries in and not having any oversight. That is one of our main concerns, is that you have proper segregation of duties.
And as far as checks and balances for any types of threats, for any type of nefarious things, it seems like we're healthy in what I've read. In that, would you say that would be a great assumption on my part?
What I can say is that you don't have any internal control findings. No deficiencies were noted. We didn't even have any verbal recommendations this year on how to improve those processes. I feel like you guys have done an excellent job. Your staff is doing really well at keeping things separate and just making sure that the numbers are correct as well.
So as I've been digging in, being on this committee, can you share this appropriated fund balance, more specifically the 2.9, what it?
Where are you? What,
Well, she had mentioned it earlier in the presentation, but I just happen to be looking right now. Where on my schedule? I'm on Schedule 1, page 71. Ultimately, it's impacting the overall fund balance, but it just says appropriated fund balance, 2.91 million, 2909.
This is general fund.
This is changes
Oh,
in.
yeah, okay.
I can speak to that unless someone else would like to, but
You're the best person.
okay, thank you. The appropriated fund balance is basically, that's coming from your budget for the year. So it's how you basically use to balance your budget. So that figure is a budgetary item only. There's no actual balance to that. If you look at the actual column, it says 0.
Yeah.
So the $2.9 million transfer that I'm referring to was actually on your Exhibit D. And that would be, I'm getting there, that would be page page 19.
Hold on a second. It's a lot of pages here.
It's, once you get there,
Oh, there it is.
it's in the bottom section called the other financing sources and uses. So it is a transfer to your capital reserve fund of 2.9 million.
From the general fund.
Yep.
Yes, from the general fund to your beach renourishment inlet management capital reserve fund. You can see the opposite end of that and, that far, one of the next to the last column.
Okay.
And that was done in, was that in November or December?
Last year?
Yeah.
Yeah.
That was to get in line with the 70%, upper tier. Like,
Yeah.
that transfer was for where we were at 145% to get us back down to 70.
That was executing the general fund balance policy. Is that
Yes.
correct?
Got it. Okay.
Anything else? Last call?
Nothing from me.
Thank you very much, Elsa. We really appreciate
Thank
it.
you.
Nice work.
Will you be here tomorrow?
Yes, I'll be there in person tomorrow, and just wanted to quickly clarify, is there time for me to revise that slide, or would you just prefer that I verbally state the minimum for fund balance policy and the LGC minimum?
Verbally's fine, I think.
Yeah.
Okay,
Just verbal.
perfect.
Yep.
I will make a note of it, and I will see you all tomorrow.
Thank you.
Thank you. Thank you. Nice work.
Thank you,
Thank you.
thank you.
Bye-bye.
Daniel, did you have a comment, or?
Yeah, I was gonna say the slides are already in the packet. Like,
Yeah.
that's right, they
yeah,
are.
Yeah, we don't want to make her do
I don't want Heather to be mad at me.
that. Well, I was thinking Elson's got to redo all of it.
She'll come out fine.
Okay, so moving on then to, actually, we added Agenda 5A. This is the end of the 3-year contract, is that correct?
That's correct.
And you and maybe Brian can help us out. We would recommend to the board that they go out to bid for another 3 years of audit services, is that?
Sooner than later is better because auditors are few and far between for the public sector nowadays.
Okay,
More and more getting out of it. The LGC is trying to make the audits more audit-friendly, more auditor-friendly, to encourage more of them to get back in it, because they've even noticed that this is a huge problem that municipalities are struggling to find auditors. So, yeah, the sooner the better on that.
okay, so Brian, keep us honest, can we add this to the agenda tomorrow? Is it something that you guys just do?
I would see, I'll make sure, talk to Heather and talk to different ones. I don't see where it would be an issue, but yeah, sooner rather than later, that we go ahead and do it. But actually, we know that it's got to be done already, right?
Yeah.
I mean, because if it's on the 3-year, if we're on the 3-year mark, then we need to go ahead and.
It seems like it should just be part of your operational
Right, that's
work.
it. I don't think it needs to go back to y'all. If this is part of the 3-year, contract.
Yeah, this is,
So-
this is the end of this is the last year of the 3-year contract. So we don't have anything
Not unless
contracted
it's
for next year.
At some other time that I don't know about.
I know that, at least when we get the RFQs back, or RFPs back, the board has to review them, and the board's the one that hires the auditors, so.
Right.
I mean,
That's fair.
Typically, this board reviews them and makes a recommendation to the BOC, and the BOC takes it or doesn't take it.
Yeah,
But,
so, we can get the RFP.
Yeah,
we can do
I would
the
think
other
we
one.
could
We'll
get the
just
ball
go ahead and
rolling
do it.
and then bring back.
Yeah.
okay,
Put it on the agenda then.
well, I
Yeah,
guess
there's
that's
no
my
need-
question.
Yeah.
Yeah, there shouldn't be any need. If this is the regular 3-year process that we gotta do, then there should not be anything. RFQs, we'll get them out, and, then, y'all will have them, once we get them returned, then we'll go through that process.
Okay.
Beginning the vetting process.
Because all I remember is 3 years ago, we got bids in,
Yeah,
the board, this board made a recommendation, the board, BOC selected one, signed the contract, and then from then on, we just said, let's keep going. We never changed
Yeah,
horses.
Look, I will tell you right now, because I've talked to Daniel about it, I know of 2 auditors that got out of doing municipal any local government
Yeah.
because
Yeah.
the process is becoming so cumbersome. And like you said, the LGC is, that the state is actually, that's one of the things they're looking at, trying to help lessen the restrictions because one guy that I had known for years, he said, I've been doing it for 35 years and 40 years, and they keep on making it so extreme to do those, because you see just how thorough
Yeah.
Elsa is and Martin Starnes, and they do it every year, but yet all of a sudden, something will change, and all of a sudden, a few years back, they had to do 2 different forms of accounting. I can't remember exactly what it was.
Yeah.
Well, actually, the indicators, that just started 6 years ago.
Oh, all right.
And that's a whole nother thing for them to do that, to submit.
I think the key too is just so that we can simplify it for the public. You know, we can get caught up in those accounting numbers and how does that look in the gray space of the residents? How do they read it? You know, not everybody's gonna understand what we're understanding in accounting numbers. So how do we simplify that when it does become a product? I think that's really important as we look at these auditors. And, you know, it's not worth the buck, right? It's what I keep hearing.
Yeah,
It's
no,
not
no,
worth the
no, it's
buck.
not, that's not worth it. Yeah, no, it's actually.
For the auditors.
it's
For the
just-
auditors, correct.
Right, yeah, I mean, so.
Yeah, they're able to make.
More
same
money elsewhere.
with
Right.
less
Yeah,
work.
that's it. That's
Do we have a policy that we have to change auditors on these 3-year cycles, or can we keep using the same auditor? Is there,
We
I-
can keep using
Yes.
the same auditor.
We can.
We do have a policy that says, I think we will go out to bid though every 3 years.
Okay.
and At least look.
it's one-
Yeah, that's my
If I
understanding.
remember right.
Yeah.
And it was 3, this is the third.
This is the 6th year. This is the end of the second contract, which is the question, is they've been 6 years, so now, does it make sense to change, or we go to 9 years?
Well, I won't, it's one of those things of whoever gets the bid, and who actually does do the bidding. I guess it's because, now I've dealt with Martin Starr before, not Elsa, but somebody else, you know. When they are in the business, you're gonna get the product.
Yeah.
And I'm not, you know, saying you need to go, stick with them, or anything. That's not what I'm saying is, you know, the auditors, it's extreme, it's hard.
Yeah, I think, Brian, partially what you're saying is you need to consider quality of audit as well. I mean, you can find a local practitioner, a one-off local practitioner who'll do the audit,
Yeah,
but it may be not the same quality of audit you might get somewhere else. So you need to consider quality of audit when you're looking at auditors as well.
that's correct. And it's the same way with the lowest, and it's not, you never go with the lowest bid. It's the lowest responsible bid. So you know, and the responsible, that's the key word, and that's the same way we're doing with the auditor. You look at that, you look at the history there.
is there anything to build in of managing the risk of going to the same auditor for now, if we did it? I'm not saying we would, but is there anything that should be built into that process? Like, do they have to use not Elsa, but someone else, or is there anything?
They
You
have
could
a-
switch partners.
I believe they switch up the partner that reviews
Right.
every so often.
And that's how they use
Okay.
it, because you don't have to necessarily switch firms, but that's how they usually will do it internally.
That feels
on their
better.
end, that's how they work with that.
Okay.
And also, at some point, there's some savings because of the consistency
Yeah.
in that relationship that already existed from 6 years
They-
ago.
They know exactly, as she was saying, the quality of the work the
Right.
staff does, and they know when she calls or when she's in here and
Yeah.
says, Daniel, we need to test this, we need you to pull this. And they know they're gonna get it, so.
In a lot of ways, it's actually, it can be a more strenuous audit because they're testing, they know what they tested last year, so they're testing different things this year. To where,
Yeah, I'm not offering an objection to it, I just want to make sure we build in the safeguards that we need to have in the
But
RFQs.
even in the auditing firms, they have the internal review. So, I mean, even with the same manager,
Yeah.
it's not just what she says go, because after the report's
From their
done-
internal
Yeah,
controls, okay.
they have the internal control to to assess where the risks are, so they have to report to that internal board review.
So there's nothing we would need to put in the RFQ to make sure that's
No,
built in
no,
then?
because
Okay,
they
thank
already
you.
built into that,
Okay.
in the system.
Got it.
I think you said the partner that reviewed it,
Yeah.
did the internal review this year was Marcy.
Okay, thank you.
But they also switch around the partners for that internal review, so that is how they ensure the quality of the work.
Yeah.
So.
Okay, good.
Okay, so we're good. You guys are going out with a bid, RFP? Okay, and we don't have to talk about it tomorrow at the BOC meeting. You just send it out. Okay, good.
Okay.
All right, item 6, discussion and possible action on B-Part fund balance policy. Let me just catch everybody up to speed here, and then if you can,
I'll be happy to.
but this is, I think, version 4. We started out with kind of a template version, made some modifications in our last meeting, went out, I think, you made some more modifications, Tim sent it to me, and then I just made the latest version modification, but I'll let Tim walk through it. What I did was try to take the numbers off and say, let's just talk about the categories and let the town come up with what the number is, but say, this is the kind of thing that needs to be in this category, this is the kind of item that needs to be in this category, and then not have the policy get hung up in 2 million versus 4 million versus 8 million or whatever.
Version 4 is the latest then?
Which is the one that you should have gotten, Daniel sent it out,
Yeah.
it's marked up,
Okay.
with the latest, I think it's just got the latest changes, I don't, maybe it's got all the changes, I don't know, but, Tim, since this is 80% the one you sent.
Yeah. So I started with reading the enabling legislation, and, excuse me, and tried to understand exactly what was being taxed, how it was being taxed, and how it was being collected. There's really two pieces of this, and there's, once you understand the enabling legislation, the 3% versus the 2%, and the 5%, and the 6% with the county in there, and all those other kinds of things that go on, there's really two pieces of this, and what this policy is asking for is a required accounting segregation. In other words, taking the 3% and accounting for that separately than the 2% and accounting for that, because they're used for different purposes, right? And a lot of transparency around that in terms of beach nourishment versus tourism-related expenditures. So that's really, I mean, the purpose and scope and the legal framework is really to develop a common understanding, so a person off the street can read this and understand kind of why we came up with the policy, or why the town came up with the policy, really. So the first suggestion is a required accounting segregation, and then the next part is the segregated reserve requirements and setting the reserve requirements. So when I first put it together, I just put a straw man in there in terms of what the requirements could be or should be, but there's been some question, I suppose, in terms of why you need to set targets. And I'll tell you, one of the reasons I think we need to set targets, and that is, I go back to I studied this, and it took me some time to figure this one out too, but I go back to the 2016, 2017 tax increase that we did for the Central Reach project. Taxes were increased $433,000, $434,000, I forget exactly what the number was. And there was an intent at that point in time to transfer that over, because it's an ad valorem tax, transfer it over every year to the B-Part fund, and the B-Part fund pay the Central Reach project debt out of that. Well, in the meantime, occupancy tax revenues have moved from 1.8 million in 2017 to 4.1 million in 2024. So that wasn't needed, right? Unless you're going to put it in reserve, or you're going to do something else with it. Right. And, so you've got this tax out there that people think they're paying for the Central Reach project, and it's the general budget, more or less, based on what I can tell. And there's been not the transfers, which is a decision made by the Board of Commissioners every year. I get that, I understand that. Has not been transferred over. So I would be in favor of actually establishing some targets in terms of, I know, Tom, you changed it to coordinate with the Beach Nourishment Capital Reserve, or the Beach Nourishment Study that I looked at in 2019. And then there's, as Daniel pointed out, there's an update every year to that study. I don't see any numbers in that study other than, there, in the summary report, it said that on the average, on the average, there's I think it's $230,000, 230,000 cubic yards that we put on the beach every year.
Right.
And, and I don't know what the value of that is. I'm sure it's not cheap, but if you've got, if on the average you have 230,000 cubic yards that you put on the beach every year, you've got to at least fund that, right? Out of these reserves and whatnot. So that was the thinking when we put this together. I know, Tom, you made modifications in terms of making this consistent with, you know, that capital reserve, the beach renourishment capital reserve study, if you will, but I don't see any numbers in there. The master beach nourishment plan, I guess, is the term you use. I don't see any dollar numbers in there. So I don't know how the Board of Commissioners, once it gets a policy like this, makes a determination in terms of how much they want to transfer to that fund or how much they need in that fund. If you've got to spend $20 million every 20 years or 25 years, that suggests $1 million every year, but I mean, different people can have different opinions in terms of what the number should be, I suppose.
I kind of read this as a two-part deal. One of them was establishing the framework, which seems pretty straightforward, and it's very aligned with what I've been reading we're required to do, right? That, I don't think big questions came up on that. Was I reading that wrong, or?
No, I think that's right.
The framework makes sense.
Yeah, we got the 4 categories from Elsa, actually.
Okay, so
These are the ones.
the bigger discussion then is about what do we fund, what type of reserve should we be trying to build? Because we're not mandated right now to put money into this fund, or are we?
We're talking about the capital reserve fund? Well,
Well, let me look at the structure here so I can use the right term. But yeah, from the additional occupancy tax,
well,
we can use up to an amount, but I don't know that it says there's a mandatory amount for it.
So for the default fund, there's, if you look at Exhibit C on the draft audit, page 17, the state requires the stabilization by state statute at 2.2 million. That's like their requirement.
Okay.
To keep for operations, basically.
Yeah.
Fund.
And is that's built in here?
I think we started with, this is probably the largest uninsurable risk we have in the town. I could be wrong on that, but I can't think of a bigger risk that the town has. So it's a risk.
Especially with funding not looking prettier from the government.
not
Right.
being able to account for sure on FEMA.
Yeah.
Yeah, less and less, so.
Yeah.
Well, that's the point of reserves too, is that
Yes.
we're looking at everything that everybody owns, and here's the number of what those reserves should reflect, to replace that without any assistance, which means, someone
Agreed.
said it earlier, tax increases, parking fees, all those things increase.
Yep.
Yeah, I mean, to me, there's kind of 2 things going on here. One is just having a fund balance policy. We've got one for the general fund, and as we talked, we've executed it. When it goes over a certain percent, we do certain things. There isn't anything for the B part fund. So just having a policy is, I think, very good. And then part of it, like I said, these categories are, I think, are pretty good. We're, you know, restricted, constrained by law. We got to do it, you know, we got to pay the county, laws like that. By ordinance, that's like if it's in the budget ordinance, we're going to do a fund balance appropriation, then we've got an ordinance that says those monies are going to be spent. And then you've got a sign, which to me are, you know, beach nourishment, maybe fire station in the general, you know, we've got in our capital improvement plan something we want to do, and we're planning to use reserves to do it. So
Yep.
we've kind of assigned these dollars to this capital project whenever it's coming out. And that one's kind of loosey-goosey, because, you know, we've got some big ticket capital items that we should save up for a couple of years, you know, $170,000 worth of police trucks. We probably should save up a little bit versus think we're gonna pay for them all right out of the operating budget.
Right,
So
right.
those are assigned, and then unassigned, which is, it's there, it's discretionary, we don't have plans for it, we can spend it on what we want to spend it, you know, we can talk about how we go about that, but just not viewing this as an $8 million bucket of money, but viewing it as, you know, we plan to use this for this, we plan to use that for that, and having that construct or that breakdown, so when we get into discussions about this bucket of money, we're talking about pieces of it. You know, this is how much is already committed or assigned or restricted, and this is much is available, that kind of thing. So those are the two pieces that I see as having a policy and being able to talk about the B-Part fund at that level of detail. And then we can get into the discussions about, well, how much do we really need for this or really need for that? And is it there, is it already accounted for, and things like that. So I think the main change I did was to take some of the dollars out because I think we left the general catastrophic, but, you know, just in general, if we got hit with a whopper storm in May, we didn't have any occupancy tax because people couldn't rent the house. You know, we had all these extra expenses because we had to recover, and, you know, we should be prepared for that or have something set aside for that. So that's the goal. You know, right now, I guess, I'd like to get to a point where this is something worthy to be now sent to the board and let them weigh in on it. And, you know, I thought taking the actual dollars and estimates out would be helpful because we'll fight over those forever versus saying, Daniel, tell us how much we've got committed, or Daniel, how much do we already, you know, these projects in the SIP, how much are they gonna need out of fund balance? And
I do like the approach, getting a policy in place so that when we're doing the 10-year outlook, then we can now talk about very specifically the way it's delineated here.
I think the biggest hurdle with this policy is gonna be making sure everything stays in line with the B-Part law that is in place.
Right.
And the state stabilization that's in place. Because we don't want to
Connect
have a
them.
policy because it can't overrule the law or the state statute.
Yeah.
yeah,
So like the 2.2 million for state stabilization, that has to be there. The amount that has to be spent, 3% on tourism,
Tourism, all that.
2% on beach nourishment, that has to be there. 1% has to go to the county.
So do you agree there should be a segregation of accounting for the 2% versus the 3%?
Yeah, I don't know that segregating it into a separate line item would really help, because that's more of a budget exercise that Christie goes through during the budgeting process. Whenever she presents her initial budget, she's already gone through that and made sure that the amount that's supposed to be spent for beach is in that budget to be spent for beach and in that budget to be spent for tourism.
Well, what's the harm from a transparency standpoint, at least just saying, here's the 2%, it says we have to.
The harm is, if you look at our monthly posting to the website, if you look under Fund 50, I don't know how many accounts there are, but it's a lot, and you're talking about doubling those accounts. And it's so transparent, it's less transparent.
From the chart of
because it's
accounts, got it,
already
got it.
impossible to read. So, I don't think like I say, doubling those accounts would.
Yeah.
How do you know there's excess funds from the 2%? Let's say you get to the, let's say you collect whatever and you have excess funds on the 2%. Well, how do you know you've got, how do you know how much that is and how much you're required to put it into a fund or?
To hold escrow.
To hold for sand.
We're very sand heavy in the B-Park fund. I don't think that's never been an issue in the 5 years I've been.
Sand heavy in terms of spending, is that what
Yes.
you're saying?
well, yeah, we're paid off Central Reach, right?
Yeah,
Yeah.
but once Central Reach is out, what's Central Reach?
1.2 million.
A year?
For another,
When's that off? In a couple of years?
Is it 2 years?
to one or two more payments, yeah. And
Well, I have another one.
you know, I think that one of the problems or concerns or debates is that's paying off past sand. That's paying off Central Reach sand, not set aside for future sand.
Right.
And that's the dilemma right now is, yeah, it counts, it's sand, it's spent on sand, but it's not helping us save for the future
For the
sand.
next
It's paying
sand.
off sand that's been on the beach for 10 years now. So, I know we've had the conversation of, you know, should that you know, if the reserve fund can only be used for sand, should we just automatically take that 2 cents and put it in there? Pay the county 1 cent, pay ourselves 2 cents, and then manage it that way? Or, because that was the original plan, it's my understanding, and that fund should have 10 million in it as of now, but we didn't follow that plan, and it doesn't have 10 million in it, because of it being used to pay off the loan instead of banking it for the future. Just comments. So is that in here, Tim, to recommend that the 2 cents just goes to the reserve fund?
What
Or is that-
requires a separate account, this is asking for a separate accounting.
That'd be the 2 cents.
Yeah,
I wonder if there's a way to do it without having to create a whole separate duplicate set of chart of accounts on it, though. That's the concern I'm hearing, is the chart of accounts is already huge. And if we're gonna
Yeah,
now
that would be
hold
a
this
big
out on the
burden on the
side,
management side.
it gets crazy. And so is there a way to roll this up so you have that reserve clear, but it's not,
but, so, in that account, I would think there's police, there's fire, there's whatnot that we help subsidize. And then you've got beach renourishment or beach items, right?
Yeah.
Isn't it more of a separation of, I mean, you're not gonna have police and fire and streets and whatnot in the 2%. You're
That's a
gonna
fair
have it in the
question.
3%.
The,
So isn't it just a matter of taking these accounts and separating them?
Well, no, because didn't I send you the highlighted
Mhm.
expense sheet with the breakdown?
Mhm.
So like all of those highlighted expenses are either fully beach nourishment or in part beach nourishment. So some of them would have to be split out, some of them would already be set, but also those are spent in real-time beach nourishment. That is like ongoing money. That's not reserves, that's the,
Sand fence,
yeah,
vegetation,
sandfish.
dredging.
Yep.
Yeah, no, that's the dilemma we're in,
That's
is
real-time sand
we're
on
spending
beach
it,
now.
but we're not,
we're
you
not
know,
saving for the.
we're not ready for another central reach, should we need to have one.
But
To
the
me-
way you look at it, you know, is all of those things are necessary for the beach, whether it be sand fence. I mean, that's something, that is a protective order of helping build the dune system, so you can, it'll save as much sand. So it's hard to separate that part of it out. I know where you're coming from is like, okay, beach, if we need to do a beach renourishment. But all of those things are protective measures, and so it's sort of, it's hard to separate those out.
But if you look at total what we're spending on, I'll call it beach nourishment, you know, what, can we roll that up and say, here's the number, here's what we're spending every year on it, including paying back the Central Reach debt, which will end soon. And then we look forward and say, okay, our ongoing spend, Central Reach is gone, so now that can go into I'm gonna call it an escrow account.
Well, in our beach inlet CIP,
Yep,
that's what that shows. The beach inlet CIP shows after the 1.2 falls off, it starts going into.
It goes into that fund.
The beach nourishment fund.
Would that provide, do you think, Tim, the accounting?
well, we've still got unanswered questions about that fund, if I'm, yeah, because it was set up for 9 years and a $10 million cap. So, we don't know what that means, right? We
Yeah,
have our
I still
hands
haven't-
tied,
I
I
still
don't know, unless you
haven't
guys got some more insights on it,
I
because
still haven't gotten that guidance back from the School of Government.
Yeah.
okay, because we may be forced to do something
Yeah.
if we want to save more than what the fund will allow us to save, because that's a real issue. We just found that out, that the Beach and Inlet Capital Reserve Fund was set up with a 9-year duration and $10 million cap.
10 cap, okay.
Yeah,
Yeah, and it runs out in 25, 26.
that's now.
Yeah.
I think
26, 27.
Next year,
26,
right,
27.
right,
Now.
which is now.
Basically now, yeah.
Act this year or
Yeah.
not be able to act, right? That's how we're interpreting it at this point, is act now or you won't be able to save it.
So are we saying that this document is too premature to roll out in front of the commissioners? Is that where we're at?
I guess that's a good debate right now, is at what point do we feel we need to get it to you know, because it could get totally shot down once it goes there, or not, or sent back with, you know, we like this, we don't like this, come back to us with.
I think you gotta start somewhere. If someone doesn't create a document and present it, then it
We've
goes
been
there.
tasked-
Also leaning on the town.
Baseline.
We've been tasked to do it, so part of the task is we did our task, here it is.
Yeah.
You know, tell us to, thank you, we're gonna trash it, or no, we like it, we're gonna do something with it, but I don't know, maybe, Brian, you can give us more guidance of what stage of maturity should it be before we take it to the board?
Well, I still think that there are some questions, so I know I don't think right at this moment you would want to carry it to the board, you know, until you come to an agreement of exactly where you want it to be before it goes to the board, because I think there still are some questions amongst yourselves, not unless, unless you want to go with it as is. But recognize, you know, well, we're gonna have a transition, so the new members coming on are gonna have to digest, well, actually, all members are gonna have to digest it except for you, because this will be the first time that they'll be seeing the document, so they'll have to digest everything in it. And then I'm sure, do I feel comfortable that something could come back to you? Yes, but it may not. They may all be good to go. Or some clarifications. I would at least think that there could be some clarification.
I guess that's part of why I was saying that, you know, the first part is saying we want to set up a segregation of the funds, just clear communication of where the funds are going. And then the second part is how much do we want to establish as ongoing standards?
Right.
I'm wondering if Part A should go to the Board of Commissioners, but I am hearing a little bit of concern around the accounting side.
Yeah, I mean, let me, because the other concern, I mean, it's called the B part, it's Fund 50, it's B part. But we also now have significant amount of paid parking revenue that's going in there. So it's not this 3 cent, 2 cent anymore, it's 3 cent, 2 cent plus paid
Plus
parking.
that.
So it makes it a convoluted bucket of money that we're trying to get some clarity to, you know, because paid parking, we can spend that on whatever we want to spend that on. It's not restricted as occupancy tax or dollars would be.
So what is the issue with having a draft? This is a draft document. We're drafting it back and forth because we could easily sit here and lobby this ball back and forth amongst ourselves, but it should have something in front of the commissioners who are making the decision, right? And then they can chop up our document or redline our document from there.
Right, and obviously, we all know it's not gonna go tomorrow.
Right.
Saturday, December's a transition meeting, and then it's the new board. So I think we're, you know, even in December, is the first half of the meeting, or the second half of the meeting. But, yeah, I mean, I think that's the discussion we need to have, is that what format do we as a board feel comfortable, we've got something to report back on our tasker and say, okay, this is how we define what we were charged to do, this is what we came up with, here it is, give us guidance.
Yeah, ignoring the back end challenges, the front end, to me, this makes perfect sense, and it's transparent, and it shows you where the funds are coming in from, and the major at a high level bucket, where they are and where they need to be.
Yeah, and I don't fully understand the accounting issues, because we have to demonstrate to the auditors every year that 3% was used for tourism, and that 2% was used for beach nourishment. We're required, I mean, the auditors have to test that, and that's what I was asking Elsa about, how they test that. So, I mean, the accounting's done at some point in time, and maybe it's on a spreadsheet, or you showed me the sheet that,
Yeah, I mean, the big thing is, like Tom said, there's parking revenue in there too. So
right?
the thing is, there's over the 3% spent on beach, there's over the 2% spent on beach, and there's over the 3% spent on recreation. Because there's a whole nother $1 million coming in, that's all being spent on beach, inlet, parks, and recreation. So
Okay.
there's never been a concern of the, I guess, extra.
Spend extra over the.
But at the same time, Daniel, no one can explain where the parking revenues go, no one can explain why the pier isn't built, no one can explain why the beach, we don't have a beach fund that it's $20 million or whatever. I mean, I don't know what to do with this, other than require more transparency in all of it.
Yeah, it's hard to digest the way it is now. I guess that's the,
It's all one big blob, and you can't, I mean, that's where all the action, in the end, that's where all the action, I mean, it took me a long time to figure that out. But that's where all the action is in the end. The general fund takes care of itself.
Cans are piled up.
Right.
Well, I mean, even the general fund, even part of it goes to the beach inlet fund, so.
yeah,
I get it.
yeah.
I think, I don't know, if you want it to, if you want the policy to be more of I'm trying to figure out, are you leaning for this policy to be more of an accounting policy or more of a fund balance policy? Because like the general fund balance policy, anything over 70% and a target at 30 to 40%. I understand what you want us to do with that, but I just don't know what the goal of the policy is. Like we want
Well,
to
if it's one big blob, the policy might say something, but if it's divided into the separate sources of revenue, the policy might say something different.
I mean, my goal is to not view it as a blob, but,
Right.
at least we got 4 slices of the blob.
Right.
And we can talk about what these 4 slices are. And then we still got the issue of we're spending the money every year. This is what we're spending it on. So no savings is coming out of that blob unless we're squeezing it as hard as we can to get some savings out of it. And that, to me, somehow in here, we need to say, these are the kinds of beach projects we should be expecting in the future because we've experienced them in the past. This is what we should have on hand if we want to pay half in cash and finance half. And this ought to be our beach savings plan.
That would be a great
Now that's-
transparent discussion right there.
It's,
Simple, not that simple to do maybe, but yeah, I think that's the point of this.
So you're talking about a number though, you're not talking about a number, you're just talking, I want to make sure.
well, right now, it's like, is there money in the blob to do this? Nobody can answer that.
Okay, I just want to make sure, because it's hard, you had asked the question earlier about, okay, how much do we need every year? Actually, we talked about this, ad nauseum. We pretty much have talked, Tom and I have, and it's been good conversation as far as every year, to know about how much money you need for a beach renourishment or something like that.
Sure.
Every year, every day, it literally can change of what the cost is based on the availability of dredges, they're only a limited amount anyway, and how far they're gonna have to come. Let's say they could be up in the northeast, or they could be all the way in the Gulf Coast and have to come all the way around. So all of a sudden, your mobilization charges, all those things go into play. And I know that's not the answer you want to get, but realistically, all of those factors go into play when you send out that bid that changes the amount, and literally it could be millions in the
Sure.
difference.
Sure.
Now, what you're talking about, and again, this may have nothing to do with this, but I think this is sort of where you were going, of knowing, okay, how many thousands or hundreds of thousands of cubic yards would we need if we had these several hot spots hit, and all of a sudden it instituted something for you to engage to do a nourishment project. That's something more that, you could talk with Fran about, but those numbers, you still wouldn't know the dollar amount until you hit it, because it was based on, it's all about supply and demand, as you know. And I hate to be just as generic as that, but that basically is what you run up against every time you do a beach renourishment or anything like that.
But Brian, we've got 20 or 25-year history now, right, in all of this. Shouldn't we be able to use that history to establish some sort of a minimum reserve?
That, you're talking about with.
Central
Fran.
Reach and
For
yada,
Central,
yada,
okay, yeah.
yada, yada. I mean,
Yeah,
all these
Fran
things.
does. Now, Fran's got that data. That's the good thing. I'm gonna tell you, Fran's been here for 20+ years, so he's got all of that documentation to be able to read into that, if you were gonna do something like that. Now, I'm not sure you're talking about doing, we're sort of getting away from the B part policy, because that's more something that the commissioners probably don't need to discuss if you want more of a different type of master plan. But, and that's where you would come into play with that. Now, and you could always use today's dollars, but if you want to put numbers in there of how much you need to have, but tomorrow, they would be different.
No matter what number you pick, it's not gonna be right.
You're
Period.
correct.
No
Now,
matter.
you can, I mean, that's.
Yeah.
I would rather use cubic yards, quite frankly. I'd rather, what I'd love to do, and you're right, is take this 25 years and play it forward and say, what if we got hit by another Florence or Matthew or Isaias
Yeah.
next year, 5 year, how much cubic yards of sand do we think we would lose? And is it enough to trigger a project, or we can absorb 2 Florences before we're in trouble? Just having that forward looking, so we can say, yeah, we're saving enough, or no, we're not. Because right now, we don't have a plan to balance off and say, if we got hit with Florence next year, we're in trouble. We, Oak Island's in trouble. They just shelled out 40 million. They had that in their bank,
Now, and there again, and I think we talked about that they had that in their bank, but they may have collections different than the way we had it here as far as how they accrued it, because,
They have a sand tax, yeah.
Yeah, and I see, and that's where you and I are talking about is, Carter County, where I came from, has an actual sand tax. Occupancy tax is one thing, but it doesn't go to each individual town. It goes to the county, but it all helps with, sand renourishment, or the beach renourishment. But then also, every town, except maybe one, has, but they may have one now, they have a sand tax. And basically, you got 1 penny, that goes, or 2 pennies, or 3 pennies, whatever it is, goes directly into a sand tax. And it's there for renourishment when that time comes. That helps give their match.
So,
That didn't answer any questions. I apologize.
well, it's part of the bigger
circling
picture.
back up. So we got,
It's part of the
It's
bigger
helpful.
picture, because the bigger picture is, if we got to do it, where's it coming from, and how much money needs to,
How do we count
So,
Yeah.
I don't know, I know you're talking about 2 different things, but for this policy, I don't know if you would want it to correlate with the plan. So if that's the case, you might need to hold off, if you wanted it to work in tandem. If you didn't, you can still have the B part, you can still do this policy. But I know that there are 2 different things that we're talking about, but they seem like you were trying to interconnect them a little.
well,
I'm trying not to
central.
read into it.
You're right, no, you're right.
No, that's very much
Categorize them.
true, and the whole status of the reserve fund is key to this.
Yeah.
So, there's a lot to do, and there's a lot that needs to be done. I guess if, it'd be good to move forward on something. I would very much like you and Daniel to say, yeah, this makes sense, or yes,
Okay.
ideally, you'd say, we're on the right track, let's go, but, so maybe it's in your court now to say, tell us what you think, and then we can take it, we'll take it here, and then we'll take it to the board from there, if that's.
We'll get together, we'll talk some, and, then it may require y'all to meet again. I'm sure it will, but, that way, and we can discuss it some more
That'd be helpful.
to see where we might be able to go.
That'd be really helpful.
That'd be great.
and let's not overcomplicate this thing too.
No.
'Cause there's legal guardrails that are never gonna change, right?
Yeah.
So,
I'm maybe too
the
impressed.
fund balance, this categorization of them, what's restricted, what's committed, what's assigned, what's unassigned, I think the simplicity of that says it all, because we don't want to continue to make work for
Yeah.
Daniel
Yep.
and the team that looking at the forest and missing the weeds.
Yep,
And the good thing is the B part law is the law.
Right.
So that, we know, whether it could be, all the stuff is blurry or blobby or whatever, we know that, especially after talking to Elsa, we know what 2%, I'm sorry, I know I'm talking to y'all too, but I'm talking to everybody else. So, you're exactly, the simplicity sometimes, the B part law is in there, tells you what it is. Yeah, the occupancy tax.
yeah.
Yeah.
Tom, this says it's a B part fund balance policy, but aren't we really talking more broadly as a SAM, I'm gonna call it?
I was,
B part is a portion of the funding of an overall
yeah.
framework of, I'm just gonna call it sand.
The thought here was Fund 50, the B part, Fund 30 is general fund,
Yeah.
fund whatever the.
Fund 50 is
so
B part, yeah.
a policy for Fund 50. And like I said, it gets complicated when you put parking revenues in there too. If it was just the 3 cent, 2 cent, it'd be
Yeah.
cleaner, but,
Here's how I approached it when I sat down and thought about it. I thought about if I owned this island and I had these revenues and I had these expenses, how much would I put away to ensure that, to reserve against this risk that we have? That's how I thought about it.
Yeah, to me, that makes sense, and B part is one part of funding that. I know
Right.
accounting wise, we keep track of things that have to separately,
Right.
but that's my point, is I feel it's more about a SAM fund policy, and it says it's gonna be broken out into, from Fund 50 and Fund 30 and others.
Or better understanding the excesses that could possibly happen in B part. That's where,
Yep.
that's where everybody's getting real cloudy, because all the hands start coming out, right? For where does this go? So this policy should definitely not define where these things go, right?
No.
Because that's gonna make contention to just saying, okay, here's this pool of cash. So as you were saying, maybe this, this policy is in part, and be willing to red mark things. If the BOC is gonna review what we produce out of this committee, let's start putting something on paper so we can have a conversation back and forth and not wait for a document to be shot down, spend all this time on a document that, they don't even want any parts of. We're going down the wrong way, so getting board feedback is gonna be important.
Tim, you're saying basically, I'm simplifying it, we want a sand fund, there's 2 cents out of the B part, or if occupancy goes into it, part of parking goes into it, and I'm not sure what else, but it's feeding into that. You wanna make sure that we're transparent on what we're spending on sand and how much we're saving for the rainy day coming.
Yeah.
That's what I'm hearing
Yeah.
you describe, which,
Yeah.
as I'm listening, it makes sense, I have no idea on the chart of accounts, the impact on that.
I'd like to be able to answer the question, B part occupancy revenue was 1.8 million in 2017, and 2024 it's 4.1, plus there's parking. Where'd that money go? And how much was reserved? How much was put away? How much was spent?
Period.
Yeah,
Yep.
all right, so the plan is what, you're,
We're gonna let these guys take a
I'd
crack
like to
at
hand
it.
it over to the town staff.
Yeah.
And have you come back and say,
It could be
you know,
interesting.
here's the, I can tell you right now, the one that got me is we said we wanted quarterly reports, Daniel, so, you can come back and say, you're crazy. Maybe every 6 months, maybe once a year at the audit time, but, those are the kind of things that,
We'll give it, a month, maybe in December or maybe again in January, because I know there's gonna be a lot of
Well-
transition time, a lot of all kinds of stuff, not
Yeah.
just there, but it's holidays and so, and then we'll come up with something, then we'll come.
January, this board gets new members,
Yeah.
so I may not be here.
Oh, this board?
Yeah, this
Oh,
board.
gotcha,
This
sorry.
board gets new members in January. I don't know all the terms, but I
I'm
know.
a
that-
3-year term, I think
You're
this
good.
is my first one.
I'm not, so.
some of us are new and some of us.
Yeah. And I don't know which ones, you guys probably, you're new. Okay.
Yeah.
So it's just me.
Oh, just you, okay.
I'm on a 1-year leash. Okay, all right, so
Okay.
moving on then to 7.
So
In
we're
this one, I
tabling.
think we made a lot of progress.
So we agreed to table that,
Yeah,
right?
I think it needs a
I'll
lot
send it
more
forward.
thought. I guess my thinking where we're at is, the collections from the rental agencies here in Hobbs and Proactive and others, they've been doing it, and I don't think there's been any concern expressed. Even Verbo and Airbnb, they do it, like that you get a big check and you gotta figure out whether it's the right number and who's all. But there's still belief that there's a number, and it's an unknown number, that are bypassing all that, renting direct, and may or may not be paying occupancy taxes, and what's our exposure, how bad is that problem? Is it a problem? How do we even quantify that problem? But,
And I will say this, that problem is a lot less than it used to be, because when I was in Indian Beach, and then also in North Topsail, you know, it was a lot worse than it is now. I mean, people over time have started doing that. Now, there's still gonna be the individual people, but most people are going to Airbnb, VRBO, all of these, and we may not know, it's one of those things, they just send a check though, and so they don't tell exactly where everything is coming from, but they will send the check. So they know the law, and so they do follow that, Airbnb and VRBO. And I'm sure that there are others, I don't know if we get any other ones or not, so.
Is that Casa?
Yeah, is that what?
Casa, yeah.
Sorry, look, I'm sorry.
Yeah, you're fine.
So, but it's a lot less prevalent than it used to be.
Yeah.
Doesn't mean that they're still bypassing, because I do believe that, everybody's going, but, yeah, it just happens.
yeah, well, yeah, that, I mean, that question still needs to be, you know, is it worth the effort to, can we, they always say, is the juice worth the squeeze, you know? And like, I mean, I know people in, you know, my block that started out and had their own website, did their own rental, did their own everything, and I just looked at them and said, I bet you don't even know you're supposed to be paying this. You know, so maybe if it's just communicating, like if you just bought a house and you're planning to do this, be aware, we know you want to be law abiding, we've got a law that says you got to collect this tax and pay it. You know, maybe it's a friendly approach versus trying to, you know, because I absolutely agree. I think all the main players that have been around, they're not, you know, a problem. It's people that aren't aware.
Is there a simple summary now that can be just given to?
I don't know that the town
Says,
has.
hey, here's the 5 things you need.
From my experience, like when I talk with realtors when they come in, or if they call and ask questions about, you know, what the taxes are being owed, or things like that, or new owners will come in, we always give them an occupancy book, and the rules on how to do it, or how to pay, or what goes where. And we make them aware of that as well. And I've had some new owners say that their realtor says, hey, you need to get this information from, you know, the town hall, because they have it in hand. So there are some realtors who do pass that information along, but do they all? You know, locally, yes, but throughout, you know, no matter where you're gonna go, it's not always gonna work the same, and they're not gonna tell them. But then again, we've had people to come in and say, hey, you know, if I rent this out, you know, do I have to pay something? Yes, you do. But when they do mention that, we automatically give them that book and the instructions, which comes from the county website.
Okay. So it helps them like calculate the amount they owe and.
And it gives all the
Payment?
rules, regulations, what
Okay.
they have to pay, where it goes, what it does. But we give them a book, and it's
Okay.
got 12 sheets of paper in it each month. They've got to
Okay.
write it out. And they have to turn it in, let's say they just rent it 3 months out of the year, but they still have to turn it in every month to
Okay.
indicate, hey, zero, hey, we've got $20, or whatever the case may be. They have to turn it in.
Okay.
Seems to me we might
So
have
there's
a
a
marketing
penalty.
challenge.
There's a
Yeah, I
penalty.
mean,
Yeah.
it might not be a problem. I mean,
It's not,
what
it's
I get is
marketing.
people send me social media posts where people say, hey, save some money, rent direct from me. You know, and it's like, those are the ones
Yeah.
that create a lot of noise. I don't know if it's significant or not. But, I mean, that to me is where we're at, so.
I mean, the base assumption is they're not trying to be deceitful on taxes, they're trying to save on a verbo fee.
Yeah,
But we-
the commission.
It feels like we might have a marketing challenge to make sure,
Well, yeah. mean,
which I don't
that's
know
a
we can ask the
communication,
town to be
because-
doing that, but we somehow we ought to be.
Well, but I think it's a fair ask, because you'd get them when they come in the door and talk, but
They're not
I don't know if
coming.
we've outreached out and
Yeah,
posted
that's
to.
fine.
There's no identifier for those individuals that do this. That's the issue. There's nobody, it's like, there's no social security number for each person that participates. in
Okay.
something that produces a potential occupancy tax opportunity.
Do we have an FAQs out there or anything?
Not that, not on website, we don't, or anything like that, but there is up under, we do have new ownership, under our website, but I'm not sure if it even goes into that. I'm sure it does, but some people don't take time to read that.
And we don't send out a new owner packet.
During the 10-week rental
Man,
season.
that'd be a lot, because the turnover in time, I mean, I've looked at maybe 6 different neighbors around me just in a couple of years.
I know somebody from your neighborhood said it's a hotbed for doing exactly this.
They are.
That's what
I
I've been
just, I
told.
deal with it at our property owners association now, you know, things haven't been done in many years, and there's some people that just shirk the system, they're not here. Some of them are attorneys.
During the 10-week rental season, how many of those households will we have self-reporting? About 100, 200, 750, I guess?
It's not a whole lot because most of them's done through the VRBO or whatever it is in Airbnb.
So it's not a lot?
It's not a lot.
You track how many books you handed out?
I've not had, well, like a whole bunch, no.
Okay, I just
Because
wondered,
the
you know, this
thing
book
is-
50 here, or book, you know, I've handed
Yeah,
out
it's not
30.
been a whole lot amount, because a lot of people decide they go ahead and take the bigger renter, because a lot of that, then they don't have to worry about it.
Yeah, but the guy that I was mostly worried about did that, ended up going with a, you know, one of the rental firms. But I know for the first year or two, he's running his own website and doing direct bookings.
Yeah.
I know that for a fact, but.
We have a couple doing it.
So maybe the discussion is around penalty and not policy, you know?
Well, you gotta identify, you know.
Gotta catch 'em.
Yeah, I mean, I'd much rather be nice and say, we know that you wouldn't intentionally do this, but, you know, you may not be aware, and whether you gotta reach.
But I think the question end up to be, I keep thinking about, is the potential loss of revenue versus the effort you put into it, try to collect, you know, which one's greater, right? There's no doubt, there's that potential loss of revenue from that. But is it greater than, I mean, okay, if we.
We don't know.
Yeah.
Both are
But
unknown.
that's the thing. I
Two
mean-
unknown variables.
Yeah, no, because you can spend a whole lot more trying to, you know,
Yeah,
get $5 or $10 out of it, but I mean, if we get, I would say 80% of what that revenue is
Yeah.
it worth to spend another, I don't know, 50% of the effort to get that 20%? That's the question, but I believe the majority of what that occupancy tax is being collected,
Yeah, no,
right?
I-
The majority of it, but
Yeah.
the remaining 5%, is it worth to spend? I mean, that's not a question for us to,
How big is the problem?
Yes.
Yeah.
Yeah.
well,
And it's not a question of how big it is, it will be.
I
It
mean,
will be a
good.
problem. We're dealing with it right now with our, 19 years our neighborhood's been around. You know, the price hasn't increased in the assessment. That needs to happen, special assessments, things need to be repaired. And then you have the rental scenarios. They have a series of costs that they spread across all of us, that we need to put things in place that put them in check and have a penalty schedule in some way. And if those identifiers don't exist now, at some point, they're gonna have to happen, because each time a lot is filled with a property, you know, this problem, it just grows and grows, and it's gonna continue to grow. So what may be small today, 5 years from now,
Could get worse.
could be significantly
I
worse.
mean, one
So
simple thing, we get a reminder every year on when the times on the strand for dogs is, we could do it. Hey, remember rental season's coming up, and
Yeah.
at least get it in that newsletter, and maybe there's a new homeowner packet or something.
Or you tie it to your water bill, you know, there's a, you know, or your utilities, you know,
Yeah.
there's there's something that has to be attached to it to hold that accountability. Otherwise, I mean, this wealth isn't built by paying the bill all the time,
I
right?
think it starts small, see what we get, but
But each year, when I just got the tax bill from it, can
Yeah,
we just
right.
do another page, just as a reminder, I mean, a few liners?
Something on there.
Yeah, just another page, because to go along with the tax bill and saying, if you're, it's a reminder. I mean, that's preventive. It's to try to catch, I think there's a lot more effort put into it. I'm not sure how much.
Assuming ignorance is actually why we wouldn't be getting it.
Yeah,
Let's-
they're
Yeah.
well
Which is your
intended,
point.
but they
Let's
don't
tackle
know.
it.
It's a marketing PR thing to make sure everybody knows.
Yeah, I think.
Even if they're just renting it out a little bit, if it meets these requirements, you have to pay occupancy tax. And
Yeah,
we're
maybe
sure you want to
just-
do it.
Another page, you just, attached to the tax bill or property tax bill that goes with it.
Yeah, or the water bill. I think it's easier to
Yeah,
put
yeah.
stuff in the water bill than the
Yeah,
rest
or
of the
something
tax.
like that.
The
So
tax-
each owner goes,
Yeah.
would see it.
We all see it.
As a reminder, is like, this is actually what we have in the town, that's in the policy.
Start a
I think,
whistleblower.
Okay.
I think in something like that, you need to consider those people who are currently out of compliance and provide some sort of a clemency period or abatement, saying that if you come into compliance within the next 6 months or whatever, we won't go back.
No questions asked.
Yeah.
But going forward, the penalty is such and such for noncompliance.
I think there is a penalty for, I mean.
Sure there is.
Yeah.
I don't see
There's
it
no,
down here.
there's no penalty for noncompliance?
With
Yeah,
with
I
occupancy
don't-
tax?
I
I mean,
would
you
have
have
to
to prove
Why
they're
would you
not
comply?
compliant first, right?
Pardon?
You have to
Yeah,
prove.
well, you gotta
they're
prove
not-
that right before you
Yeah, you have to
penalize
prove
them.
they're
Like
not
some-
compliant first.
Yeah,
You can't just assume that.
yeah.
And that's basically, you have to catch it. You have
Yeah,
to.
well, it was a dilemma for me, because it's like, it's not fair, because he's competing against people that do collect the tax.
Right.
But he's my neighbor, do I want to turn him
You
in?
want to rat on your neighbors?
Yeah, I mean, it's a,
And historically, that is how a lot of people come into compliance, is their competition says, hey, they're not.
yeah, yeah,
must
I
be
mean, that's a
nice,
6%,
That's right.
that's a sizable
That's-
chunk of money on a weekly rental.
It all runs the same way in code enforcement violations or anything else. A lot of times, somebody gets something, they'll get a violation saying, oh, you're not in compliance. Well, what about such and such and such? Well, thank you. I appreciate that, and that's how you go take care of it.
Well, the IRS's number one lead comes from ex-spouses. That's their best.
So there's a new ownership application here on the site, which is really so you get the water sewer bill. It does ask, are you going to rent this property? And this is where it says, go see you to get the packet.
Yeah, and a lot of times they'll say, we've not made that decision yet. And then they don't return. They don't, we have that answer a lot. We don't know if we're gonna do that yet.
So, and then when that deal's done, if they're renting a home, the mortgage companies know that information, or that banker knows that information.
Their
So,
insurance company
Their
does, yeah.
insurance company knows that information. Yeah, there's gotta be a check and balance in there at some point. Eventually, it will get out of hand. There's 857 registered voters and stuff here now, but that number is gonna continue to grow.
All right, so where are we? I mean, it's kind of getting close to turning over to the town, do PR, do a push.
Yeah,
I think
mean,
that's the recommendation.
Is the juice worth the squeeze?
Yeah, yeah.
Exactly, we can do something, maybe put something in,
Send something out with the water bills is
Yeah,
super,
and
super
say,
simple.
just to remind you, if you haven't done this, or if you are planning on doing this, please come by to see us, whatever it might be, and that's because going to websites, looking, people do their own things so much, it really is hard to do that. Not unless, if y'all find something and say, look, here we is, this is what I saw, guess what? Email it to us. Make sure you call us, because look, we've been getting a lot of spam emails too, so, email us and say, look, just saw this, or take a screenshot of it, something like that. Because ultimately, that's sort of how you're gonna have to find out that, because people put them in so many different places, and then, all of a sudden, you'll find out, the people will continue to rent them. Let's say if they are going to skirt the system, they're gonna be the same renters that come to that, they will go to that place every year.
Yep.
And so all of a sudden, they're dealing directly with the owners instead of anything else. So that would be, one of the those are going to be the harder ones to do, so.
Just don't be soft on the note. Say,
I-
no, you're going to do it, just give us a call, maybe mention, it's the law. It's not.
And I would add a line below that, and if you know of anybody that's breaking the law, we'll give you half of the first year's savings.
There's a finder's fee.
I thought you could find a contingency firm to do it, but it's illegal in North Carolina, I think. It's illegal in other states, but I think
No,
it's
I
illegal in
think,
North Carolina.
Maybe something, I hate
firm.
to say it, because of that now, we still might need to, it might be something that needs to come from the commissioners, I hate to say it.
That's fair.
I'm not,
Right,
you know,
right,
because
sure.
they would be the ones that would need to.
Sure.
Yeah.
They direct
Get
But
direction.
I think the way it would,
Yep.
this
Makes
board
sense.
would make a recommendation
Yes.
to the commissioner saying,
Right.
I think the town needs to do this.
Yes.
And then the commissioners would own it from there.
We don't take that personal.
That's not gonna be tomorrow, but maybe we'll see. We could, I mean,
Especially because now's the time people are getting ready to start.
yeah,
looking to
advertising.
rent out,
Yeah,
to do
yeah.
it. They're gonna advertise, they're gonna start advertising. They could be now, but right after the holidays, that's when people are gonna.
Okay,
Yeah, but another thing is that taxes, they have to pay taxes as well, so they gotta turn it into their accountant or whatever they may, how they turn their taxes, the information in, they've gotta file
yeah,
for it as well.
yeah.
It's all about the accountant, though, whether they,
Yeah.
you know that.
Okay, so why don't we, I mean, we're gonna meet again, to talk about the fund balance. Why don't we, everybody kind of think what the ask would be to, the response to the board is gonna be, we think it should be, information, whatever the wording is of, and then the next meeting, we'll put all those together and say this is what we're gonna report out. So I'll task you guys with coming up with, and I think then, like I said, we're not gonna get on this meeting anyway, tomorrow's meeting, but we can
Right.
put it on the agenda for the next. And that gets us to the end. Wow, going on 4.
Lively day.
Anybody wanna make a motion to
I make a
adjourn?
motion.
You taking comments, Tom?
Pardon?
You taking comments first? Public
Does anybody
comments?
wanna make comments? It's not on the agenda, but go ahead. Have at it.
I pull back that motion. Take those comments.
Keith, 107 Durham. I think you're going to like what I got to say. I think, Tim, maybe we're not talking about an accounting issue. We're talking about a transparency issue, which is kind of what I talked about, from a public perception of how it's being spent.
Yep.
And so if maybe, Daniel, if there's a way to extract that, like an Excel sheet, and it creates this balance over here that, hey, we spent this money out of the 2%, we spent this money out of 3%, not creating new accounts, but retrieving those in a viewable PDF, so to speak. Something like that, so everybody can see what's going on. I think that's probably what we're talking about. Then the second issue, just my observation, because I'm like you, it took hours to figure it all out. I mean, I called the county and she didn't even know. So it takes a lot of work to get down through those numbers. The second thing is, from my understanding, this is not policy, it's just my opinion, the 3% is tourism, the 2% is for ongoing beach renourishment, like your maintenance fund. What you're talking about, Tom, which I think we agree on, is we need to have a reserve fund for future issues. And those are separate from what we do day to day. These are the big things, the accidents, the uninsurable part of the beach that we can't do. And so I think a lot of those are unknown costs. However, we could take a step up and go to the county. We've got 4 or 5 beaches. If FEMA's going to go away, then how do we address that? I don't think we should be out here all by ourselves. Maybe we start looking at some of those unknown costs and make them known. Like, for instance, when the beach nourishment happened, there was 4 D9 Caterpillars, equipment, excavators, pipeline, dredges. Dredge right, the Miss Katie cost $15 million to build. And so they did that with a public-private partnership in Dare County. Well, with Brunswick County with 4, and then maybe you bring in even in Wilmington into that. And someone suggested, I don't remember where it was, but they said, okay, if you're part of our group that helped build the Miss Katie or the Miss Southeast, let's just say, if you're part of that, you get a discounted rate. If you weren't part of it, you didn't want to get into it, well, then you pay full price. And then we have local resources, so mobilization cost is not coming from New Jersey or New York or even Dare County, but it's coming within our county. And if all the funding is going away from the national level, then we can come together on a county level, maybe 2 counties, and put some of those costs where they're fixed, They're not so unknown. Then it becomes down to, do you have a contractor that will come in and use your equipment? And then where can we get the sand? And make sure we have those things in place. So if we do need 160 cubic yards, or 200 cubic yards, or 400 cubic yards, or whatever it may be, it's already in place, and so we can't insure it, but we can better prepare for it. So I think we're in agreement on that thing. But I think the thing you're looking at is that 2% to be a reserve fund, and I don't think it's designed to be that way. Not that you can't take part of that. I guess you can put some aside for future funding, because we're paying past funding like you said now. So maybe you can put a percentage or that reserve amount, but 0.5% out of the 2% goes into the horrible term of a lockbox, and put it over there. And you're spending 1.5% on an annual basis, but 0.5% goes back into the lockbox. So those are just some of the things I would think about.
Anybody else?
I move to adjourn the meeting.
Okay, second?
Second.
All in favor?
Aye.
Okay, we're adjourned.